Stocks were smoked today and sold off hard, with the Nasdaq down over 3.6%, its worst day since October of 2022, and then the S&P 500 fell over 2%. Its first day down more than 2% since early February 2023. That's 356 days that the S&P hasn't declined over 2%, and it finally did today. Honestly, I think the market was ripe for a short-term sell-off. We were getting a little bit too much exuberance in the AI trade and the big tech and Magnificent Seven. There was too much euphoria for that. I'm still bullish in the midterm and long term for those kind of stocks. Don't get me wrong, but we're starting to see a rotation into small and mid cap stocks, which is why the Russell 2000 didn't do as bad as the Nasdaq today. The Russell 2000 was down only 1.8%. So I think this is just part of the stock market's rotation from the Magnificent Seven stocks into small cap stocks. I think this is a short-term sell-off. I think it's a buy the dip moment, and I don't think investors really should worry about it. And look, this was mostly due to Alphabet. And don't get me wrong, the main catalyst of the sell-off today is poor earnings from Tesla and Google. Tesla had a poor earnings report in terms of profit and demand for EVs, although there's some bright spots with their solar and some comments that Elon Musk made about robo-taxi and full self-driving and humanoid robots. And Google, pretty much, they beat on their earnings, but they had some poor YouTube ad revenue, so that weighed on the market. So those pretty much those earning reports led the big cap and Magnificent Seven stocks to decline further, and I think further accelerating the rotation into small cap stocks, in my opinion. But make no mistake, I think this sell-off today, the catalyst of that was poor earnings reports from Tesla and Google, at least in my opinion.